The Nasdaq pulled back a bit yesterday as big tech weighed on the rest of the market. But tech earnings are just around the corner. Joining us right now with what she's watching this earnings season is Ann Winblad. She's founding partner at Hummer Winblad Venture Partners. And Ann, it's always good to see you, always good to talk with you. But obviously we've been a little more keyed into the Nasdaq and some of these big tech names lately, just the pullback that we've seen. Do you have worries about any of these names as we head into earnings season?
Not really. I don't actually look at these companies quarter by quarter anyway. I look at the long-term value of these stocks. If we look at NASDAQ, which is heavy with software companies, enterprise software companies, Google, Amazon, Microsoft, companies like Atlassian, other companies that have grown quite large over the years and even over the last year. These companies are experiencing terrific growth. Gartner says this year that software companies spend by large enterprises, which are the customers of most of these companies, will increase by almost 11%. That's a huge amount of growth for these companies to share. So I'm really not concerned about the macro trends around these companies. Everyone is still well in process of expanding their digital strategy. So I think there's a lot of upside to all these stocks.
One stock that you don't own anymore, and I think it came as a little bit of a surprise to me recently, is Facebook. You don't own that stock. There have been lots of questions asked about privacy, and you've brought up some concerns just about being able to target companies, the advertising dollars that come back in. We've spoken with other people recently who like Facebook because they think there'll be a big return to advertising. What would your counter argument be?
Well, I think they're correct that there'll be a big return to advertising as we see industries come to life. We just talked about some of the numbers out there of retail. And for example, in this IT spend number, retail growth is not even baked in there as an industry in that 11% growth for enterprise software companies. So we will see advertising come back to life, but we see more competition there. Look at the percentage gain in advertising that Amazon has. I think we'll see that in their numbers as well, that number will grow substantially. The companies are looking for a very diversified way to reach the customer. And Facebook does not have the total ownership of this market that they once had. We'll see other companies come in as advertising vehicles as well. The analytics for advertising, determining how well these companies perform, are improving every day. I'm on the board of a company in Minneapolis called Optimine that looks at how well these advertising platforms perform. And clearly people are not leaving Facebook in drove, but they'll be able to diversify those dollars. And they'll want to know when they spend dollars on advertising exactly how those dollars reach consumers. And that's where these privacy trends tend to work against Facebook.
Well, that's what I would ask. I mean, the privacy commentary that we've heard from companies like an Alphabet or from Apple, they're pretty clear on those issues about moving towards giving consumers more control, doing less targeting. They seem to be doing okay with that. Why do you think Facebook is in a trickier position?
Well, because this is what Facebook delivers as their value proposition, is targeting. Facebook is very, very early on any strategy related to advertising with commerce. This is really a huge opportunity for advertisers to be directly in the stream of the purchase, which is why Amazon is doing so well. So I do think that without the targeting that they propose, which they say is their core value proposition, that advertising spend dollars will really be tested against other platforms as well. So this is what Facebook says, is targeting is what they can deliver, and very minute targeting.
Shepard Smith here. Thanks for watching CNBC on YouTube.